GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's hotter than a graphic card, mining Bitcoin at full blast. I'm your host, Kyle Reedhead. Joining me today is Mike Dudas, co-founder at VC firm Six Man Ventures and previous founder of the Block and the coolest DAO in crypto, LinksDAO. Today, we're going to talk about the divergence between crypto prices and crypto adoption, diving into three sectors that you need to watch because they are already, or at least close to, taking crypto mainstream. Before we get into it, let's take a quick second to hear from today's sponsor.
Discover Gemini, the US-based exchange built for new and advanced traders. As a special welcome gift, they are offering new customers $15 in Bitcoin just for trading. At Gemini, security is a top priority. As a licensed full reserve exchange and custodian, your assets are well protected. Plus, they offer cutting-edge security features like passkeys to keep your account safe. This exchange is setting the standard for compliance and innovation so you can trade with confidence. Head over to gemini.com/Milk Road and start trading today to earn your $15 in BTC. Sign up now and get ready to join the trading fun.
Get ready because your reward farming game is about to level up. Introducing Gain, powered by Kelp, your DGen concierge. Gain is an automated vault launched by Kelp that maximizes rewards for ETH users. It offers one-click access to airdrops and points from leading L2s like Linea, Scroll, Karak, and more. Here's how it works. Head over to milkroad.com/Kelp Gain and spot airdrop Gain. Get a complete overview of how your assets are deployed and the rewards and points you stand to gain. With just a few clicks, deposit ETH, or SETH, or liquid staking tokens into the smart vault. That's it. The best part, once you deposit, you're issued a liquid token, AgETH, enabling you to participate in DeFi on Pendle, Spectra, Lyra, Splice, and others. Gain is already live and you can go check it out for yourself today. Just head over to milkroad.com/Kelp Gain and get started.
All right, welcome back. Mike, thanks for joining us on the show today. I'm just going to share screen real quickly for those that are watching on YouTube to see a beautiful chart, in my opinion, which is the active addresses across all on-chain. So it's including a bunch of different blockchains. And what's interesting about this chart, this is using the A160 State of Crypto chart, is it's been up only since basically March. It's like exponential growth, all-time highs every single month. And what's funny is prices have done nothing but go down since March. What do you make of this? What's going on here? What's your quick take as you see this chart?
Yeah, I mean, we could talk for the entirety of the interview about this, but just a couple of key points that I would highlight. One is you're seeing some real humans using more than one address as we get apps like Fantasy or Friend Tech that basically issue privy addresses. I've probably doubled or tripled the number of addresses I personally have. So
right.
I wouldn't necessarily say that there's as many net new human users as the address increase would imply. Second, we're seeing more kind of like machine driven addresses, right? So AI agents, bots, and things of that nature. So I think the reality, if you use your intuition, if you look at, basically individual applications and how many users they truly do have and how much capital is moving or being locked within those applications, the actual number of, let's just say real, human users isn't increasing anywhere near in line with that up into the right chart.
Interesting. Is it increasing or you think it's just staying flat currently?
The general sense that I have is that it's increasing, but I would say increasing much more like the left-hand side of that chart.
Right. Okay. For those that are listening and can't see this, if we look at March, February, we were 25 million. And then in August, we were 60 million. So it's a big jump. But I guess what you're saying is probably more AI agents or just people using many different wallets, which I completely understand. I have a ton of wallets. So that makes sense. But there's still some growth in humans, just not as much as we all think it might be.
Exactly. And then the last point that I'll make is on-chain, you'll basically, there's a lot of passive users coming in the network. We'll get into that in DPIN. And so I think the on-chain metrics don't actually reflect some of the actual, folks who are touching crypto-related products.
Right. Well, let's take this. What's your outlook then? Do you think that this chart starts to increase a lot, like what we're seeing
Yeah,
here over the
I
last
think
few months, and it's real humans, or what's your expectations?
so this chart will absolutely continue to skyrocket again. As people, as the individual. So I do think we'll see new individuals. One, but two, this will continue to increase even if there's no net new human users. Just as you see more on-chain addresses that are maybe controlled by humans or programmed and controlled in different ways, and more bots participating in DeFi and areas where, for example, you have lower cost blockchains, and so there's fewer deterrents to having many transactions, some that don't execute, some that are canceled, etc. You see that on Solana, for example.
Okay. What when you think about, you said this number is going to go up and up and up, and you expect more people to come in. What are the sectors that are bringing people in, or why are people coming on chain? I mean, obviously, there's the speculation side of things that hasn't done so well for most people in the last little while. So we're not bringing in new people for the speculation side. But I think for the first time of a cycle we've had in crypto, we actually have real use cases and like real sectors, real industries being built here that are bringing in people that either don't know that they're using the blockchain, or they're using it and they know they're using it, but for specific reasons outside of just speculation, I would say. What are your thoughts on that in terms of the bigger sectors or use cases that you think are going to drive adoption in crypto?
Yeah, absolutely. And one thing that I'll say is, look, there definitely are an increasing number of users. Good metrics to look at are like Phantom Wallet has had significant downloads in middle of 2023 to now. MetaMask continues to increase. Rabby, there's a bunch of wallets that are seeing increases. So there's no question there are more people basically interacting with crypto than there were many years ago. Okay. I would say that some of the folks who did come a couple of years ago maybe aren't as active. So, for example, the Phantom Wallet or the MetaMask might be sitting sort of unused on their phone. But again, there are clear trends that there are more users. And to your question, what those folks tend to be using it's a really interesting and diverse set of applications. So you mentioned a couple of categories. One being DePIN, so decentralized physical infrastructure networks, things like Helium, where you have like decentralized mobile networks where people are running hotspots, often in areas where the major cell networks don't have great coverage, and therefore those mobile networks are now offloading some of their demand to Helium's distributed mobile network. You have things like HiveMapper, a decentralized or distributed mapping network, where people are driving around with HiveMapper instruments on their cars and mapping areas that perhaps Google and Apple aren't mapping well, or that developers who want to use the Google and Apple APIs are priced out and are looking for alternatives that are more available. And HiveMapper can provide supply there and is seeing increasing demand. Those are just two examples. The way that consumers, though, are participating in those networks is primarily on the supply side, right? So they're earning tokens for running nodes, for having a HiveMapper mapping tool in their car or a Helium hotspot. So the supply side, and then the demand side tends to be more like B2B, right? As I said, big mobile carriers, big consumers, developers who want to use mapping data. So that's a sector where it's introducing folks to the idea of participating in these distributed networks, earning tokens with unused capacity, with excess capacity that they have, or by doing things they already do in their day. So we're excited about that. That's one area. Another is payments or money movement. So stable coins, and this isn't like new news. Like you're seeing people talk about this everywhere, but we're getting into the above 100 billion in terms of stable coins issued, and you're actually seeing billions of dollars in value of stablecoin value move now, and you're seeing it globally. So you're seeing it move across borders. You're seeing it in not only the way that stablecoins were used 5 years ago, primarily in like trading, as trading pairs and centralized exchanges, but you're actually seeing them move as money in corridors, from the U.S. to Central and South America, and many other corridors throughout the world, particularly some that are tricky for some centralized providers to establish good, cost-effective routes. And you're also seeing an increase in the number of off-ramps that are reasonably priced in a number of different countries. And that's always been a problem is, hey, how do I get my money from stablecoin into local currency? So payments is an area that we're excited, driven by stablecoins. And a third one, and I'm just very high level right now with the comments, but a third one is what I would call broadly like gaming and social. And what's really cool there is that we're seeing, I would say, different social products emerge. So if we just start with social, you have Farcaster, which I think has, at least to my understanding, more of a Western usage. And you have a project now that's launched called Open Social, which angel investor, not a fund investor in. And, that has more of a Western or an Asian audience. So it's really cool to see this social technology being adopted in different regions and with very different styles, and to have different things actually be on chain, such as your identity. And in some cases with Open Social, some of the interactions and financial interactions. So that's an exciting and growing area. Another is obviously gaming. I do feel gaming is the one that always, I think, has been it's coming soon sector. We've seen, I would say, what's worked over the past couple of years is frankly the absolute simplest things work, right? Like fun social games like fantasy, where it's just crypto personalities and how much they tweet and how much interactions they get. It's like a card-based game, and I'm competing to get the most points by drafting a team of social influencers who get a lot of engagement on Twitter. But the point is, there's an element of speculation in that game, but it's also fairly straightforward and simple. It's like, hey, I pick a team. The more things they do and the more engagement they get, the more points they get. What we've found is those types of games, the ones that are really simple. I mean, we were investors in STEPN. It was like move and earn, right? Like buy some NFTs, hit a lot of steps, and earn some tokens for doing so, which theoretically encourages healthier lifestyle behaviors and choices. Those are the types of things that have succeeded to date. What we haven't seen succeed is either just traditional games that you slap a coin on top of, or games with really complex token economics. People tend to, it's hard to get a broad base of people using really complex games with really complex crypto economics. And by the way, you see this in, I would say, all of crypto trading thematically, particularly over the last 6 to 9 months, where you've seen, for example, an increase in meme coin trading. If you look at the top 30 coins in terms of volume on any given day, there's usually like 8, 10, 12 meme coins in that top 30 by volume. And the rest are like primarily L1s or L2s. And frankly, it's just because those things are just really easy to grok for the average user. And again, what we've found so far is people default to wanting simplicity versus complexity in the assets that they're interacting with and in the products that they're interacting with.
Interestingly, on the gaming side, I know we said every year people like this is the year, which this is also true with payments, and that's been way longer. We've been saying that than gaming. People have been saying this since Bitcoin was first invented. So, and it took, what are we now, almost 15 years into Bitcoin, and we're just finally starting to get payments working. So I think gaming, we're maybe 5, 6 years. Although if I look at the charts of gaming, at least of the blockchains, we have Immutable, which is like looking up and to the right. We've got Ronin also looking up and to the right. And then, I was supposed to have Ton, but I don't have it here. But Ton also looks up and to the right. I just don't have the chart up right now, which is sort of gaming, but also a bunch of other.
Yeah, and look, Ton, there's certainly a high number of quote unquote fake users and bots, but there definitely is a tremendous amount and the millions of users of actual organic users. And again, to the point of simplicity, and I'm not saying this is like awesome and earth shattering, but the most popular games there right now are just like tap, 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 clickers. But the point is, people use those. And I think it gives you at least a wedge to then introduce folks to things with a bit more complexity and a bit more interesting. But yeah, simplicity certainly has won out in gaming. And it's been really difficult for projects to deliver on, things like metaverses and really like it's hard enough to build anything on a blockchain. It's hard enough to build a game. It's hard enough to build a virtual world. When you're trying to put all three of those together, it's really asking for trouble.
Oh, absolutely.
In most cases.
I was listening to another VC, Chow, talking a couple days ago, and he was saying that the only real use cases that we've created with blockchain there's sort of two. One is the creation of new markets, so kind of speculative new markets using meme coins and everything we've done, think Polymarket, etc. And then the other one was just micropayments. And when I think about the three things that you said are the big things, which is DPIN, payments, and in gaming, especially the type of gaming you said that is good, which is either the tapping or the move to earn. All of this is just micropayments, right? The reason DPIN works is because, and the reason Web 2 or just the traditional world can't do it is because we couldn't do micropayments to incentivize people to run the Hive Mapper devices or to do the Helium hotspots. And so micropayments allows us to do that. Payments, I mean, they come from all sizes, but again, it's just very cheap to move money around the world, which we didn't have previously. And then gaming, like these move to earns and Axie Infinity, and a lot of the games that are going are actually just micropayments. So is that really just the big unlock here so far in crypto? Or like, what's your
and
thoughts
not
on
only micropayments, but being able to do it programmatically and set rules is really important. But yeah, to your point, like most card networks, like there's a minimum that that's necessary for every given transaction. So it shouldn't be a surprise to anybody that money and value is like the literal primary use case of blockchain applications, again, across a wide variety of sectors, like we just talked about, from DPIN, where you're incentivizing physical networks through making supply and in some cases demand token related. Tokens are an incredibly powerful instrument, right? Like we've created an entire new asset class. A token can have more properties than, for example, just equity, which may convey ownership and a claim on cash flow and some voting. But there are many others. You can sort of like token gate. When you have tokens, like you can actually make different applications composable with one another. I don't think equity necessarily does that as an instrument. So the token really is the big unlock. Whether it's Bitcoin as a emerging store of value, whether it's like we just talked about, smart contract platforms, Ethereum, Solana, etc., that enable effectively decentralized or distributed finance, and all of these other types of applications like DPIN, like distributed social, or even in many cases incentivized social in gaming. Yeah. So, and then obviously speculation, like you just talked about, whether it's meme coins, whether it's casinos. But yeah, it doesn't surprise me that those are the areas, because like tokens effectively are money, have value, and have those properties. And when we say 15 years is actually not a long time, like I come from traditional payments. I worked at Google Pay. I worked at Braintree, which was a Stripe competitor. I worked at Venmo, at PayPal. The amount of time it takes for relatively minor cosmetic UX UI changes in payments is decades. I mean, just think of how long it took for tap to pay at the grocery store to actually work in America. It worked years ago in Asia, in Europe and other places. It took 12, 15 years to get to work here. So I think we've made a lot of progress. The smart contract chains are less than a decade old. And so I am pretty excited about where we're at in terms of development, and in terms of the ideas that have at least been tested and initially validated. Where we started this conversation was, hey, what about the prices and where are the users? I think I'm not as excited about how many people have actually discovered how exciting these applications are yet. And we have a lot of work to do there. And I think, part of that relates to just a culture of, and I still see it, when I look at Twitter, or I look at socials, or I talk to people, I think there's maybe a little bit of an aversion to, still a little bit too much of an engineering culture, which you see with over infrastructure funding, et cetera, and not enough of a marketing and let's really tell our story culture. And I think part of that is that there's some skepticism from last cycle where, frankly, the biggest marketers, the biggest promoters of the technology, and in a number of cases turned out to unfortunately be frauds and criminals. And so I think we're still sort of healing our way out of that. But what I've been impressed by is how many interesting applications have been built over the last 18 months, even with that negative external sentiment.
Right. What do you think then is holding us back from getting this sort of mainstream adoption? Is it just UX? We got to improve on that. Is it regulation, or is it, as you just said, we just need more time to heal from the
Yeah,
bad narrative that we've got in crypto?
good question. I think the UX is at a place where if people cared enough, like they did back in like the NFT craze when the UX was way worse, meaning
Right.
transactions were far more expensive. You really only had EOA wallets, and you had to get your own address. It's much easier now. So like I'm not going to say the infrastructure is anywhere near finished. Please, let's keep building for scale and ease of use while maintaining security. But I think we're doing a much better job of that. To me, the two biggest things you mentioned, one is I do think there's still kind of like a negative sentiment around crypto and the general populace outside of like Bitcoin. Like we're seeing really substantial, Bitcoin in ETF inflows, and I think that's found product market fit, and I think that's fantastic. Same thing with stable coins, to on a much smaller number, but real numbers, and millions of real people across the globe. So that's a nice start. But as you start to get into the quote unquote Web3 type stuff, the read, write, own, I think there's definitely more skepticism. And many people will just say, why do I need to use a crypto app? What does it add to my life?
Right.
I do think that DePIN, where you can, for example, there's a product called Grass where you can download their extension and earn tokens for allowing them to basically scrape the web from your computer. Now, I'm not saying you should do that or download it. I'm just saying a couple million people have done that, and that's an interesting consumer introduction. I think as we do more of that and people kind of see the benefits of those products, but it's going to take time. The last point I'll make is again, the tokens to date that are in market, many of them aren't able, I don't believe, to basically bestow the full value that the founders would have intended for them. And I do think that a lot of that has to do with regulatory uncertainty, right? So the concern that, for example, if cash flows accrue to a token, that it's a security, and hey, perhaps this particular token wasn't registered. I think that I know for a fact that founders have been, at least in the US and in other regions, limited by that uncertainty. And so, I'm optimistic that both in the US and elsewhere, in Europe with Mika, and there's definitely going to be advancements over the next couple of years in the regulatory environment. But, I still don't expect us to get to even the early majority in kind of like retail adoption of crypto applications until, much closer to 2030 than today.
Yeah, I tend to agree. I think people won't just come use crypto because it's decentralized or you can custody it. Like most people in the world just do not care about that, or you can get a bit extra yield. Like most people in the world actually just don't care about yield. Funds do, but like people generally do not. I think it's when we can integrate this stuff into what we're already doing on the internet, and it just adds to it, makes things better, like payments, or like DePIN, right? Like people are just using the hotspots. They don't even know it that they're using Helium. They just have no idea. Like once it's hidden underneath, that's when we go mainstream, and it's like people actually just don't even realize they're
I think that's right. Now, and I think if you combine that with an economy where there's also fun stuff that you are aware you're doing, I've always said, like, I'm really interested in the crypto mullet, right? It's like business in the front, party in the back, and that could be to things like DeFi, things like micropayments, or AI to AI payments, and then. But I do think there's a place for crypto-enabled sportsbook or a crypto-enabled casino that anybody can play. I do not think that meme coins are a net negative for the world. I think they're fun. I think in the way similar to how NFTs basically brought people together and could create community. The best meme coins can do that. Of course, like any permissionless market, as we've seen through the history of crypto, you're also going to have a lot of negative projects and people enter the space as well. And unfortunately, they're often the loudest and get the most attention. But net, I think we're going to need crypto abstracted away, as you said, so the people don't know that they're using it. But I actually do think we're going to have specific things where we want them to know the token is valuable. I hold it, I own it. There's a reason to trade it. If that's not the case, then I think we are going to run into problems. And you get back to the old, enterprise blockchain where, crypto is money, is value. And I do think that people should know that these, whether it's a currency or a token that has another purpose, is something that's integral to some of the products that they're using.
Right. There's definitely an investable side to crypto. And I think a subsector of people who invest in this world will know they're investing in crypto and they will do that, or they'll use DeFi, et cetera. And then the 90 whatever % of the world that doesn't care about investing, they'll just use it and they won't really know what they're doing. Kind of like how, I don't know, traditional stocks.
Yeah, that's exactly right. Like with DeFi, eventually I do imagine regulations will change. And, just say in 2040, your wealth manager, or whoever you work with in your finances at Morgan Stanley, may actually put a portion of your cash into a quote unquote DeFi strategy, or something that's yielding, I'm making up a number, 12%, more than you might get in a traditional product. But to your point, you may not know it. But the key is that person who's advising you does know it and understands where that yield is coming from.
Yeah, absolutely. So, okay, as we wrap up here, with this idea in mind that, hey, we're probably not going mainstream on these apps until closer to 2030. And I know you
at least in the US, by the way, and I should be specific, and I do think we're seeing in many Asian countries, we're seeing in the areas where, for example, Ton is used, we're seeing millions of users. So I do think it can happen earlier ex-US. Okay.
Interesting.
So I should just clarify that. And I think you're actually seeing a number of different funds shift their focus. Like the biggest week of the year in terms of like crypto conferences and get-togethers is in a week and a half or 2 weeks in Singapore for Token 2049 and Breakpoint. And it's just by far, the focal point relative to any other region or get-together.
It's a great point. And most of our audience is from the US. So it's good for them to hear that and go, hey, it's actually very different on the other side of the world than it is here. But let's go. Most of our audience is also investors. And so they're thinking, okay, how do I invest in this? And I know in your fund, you're mainly private. So most of our private equity and most of our audience is not doing that. But when you just think, and this can just be general strategy of how to allocate to this sector, or sorry, to this industry, based off of like what you're thinking, what you're seeing is growing, what you're seeing is being adopted, and the time it might take. How are you allocating now to something like this? Do you think we're in a cycle where we're going to see kind of like what we did back in 2020, 2021? And are you trying to invest in deep in liquid tokens, or are you kind of staying away from that and going more high level in the L1s, or what's your sort of quick thoughts?
Great questions. So first of all, none of this is financial advice. I'm actually a registered investment advisor. So, it's important that I'm clear about that. But I'll talk thematically. It's really difficult. I think some people are starting to question whether, as the crypto ecosystem has grown, the number of tokens, the number of participants, the types of flows, again, now that we can get traditional flows through ETFs, whether we're going to have the same massively cyclical, call it 4-year cycles where it's like 2 years bull, 2 years brutal bear, that we had in the past. And I think we as a fund are probably leaning towards, we're going to continue to have cycles, but they'll possibly probably be smoother. Like I would expect that you won't see the entire asset class, draw down again, what was it, like 80%?
At least.
Yeah. So it would surprise me if that continued, on a kind of continuous cyclical basis, just based on structurally, how, for example, Bitcoin flows should look, how ETH flows should look, and eventually other tokens. So that's one. In terms of sectors, I think what we want to see is what we're more demand for and DePIN, for example, as a category. I think as thematically as tokens, and almost for like mimetic or thematic value, we're excited about a number of DePIN tokens. But if you actually look at the usage of those networks, and if you were trying to actually financially analyze them, many tokens still look expensive relative to. So you really have to think about how is the ultimate marginal next buyer going to think about it? Are they going to value these things on fundamentals, or are they going to value them thematically? And I think if you believe that they'll be valued thematically, there's probably good prices in the market. If you believe that fundamentals are going to win out, then things may still look expensive, including in DeFi as well, where many DeFi tokens, relative to how a traditional financial business would be valued, look expensive, but from a sort of thematic and even mimetic perspective, if they're exciting to people. So we're a private fund, so I don't have to make these decisions about which liquid tokens to buy. But I do look at some of my peers who are liquid buyers, and I think it probably it's a compelling time for them to deploy. What's interesting is when they're loudest about liquid's the right strategy, a lot of people were saying that in Q1, Q2 was actually the wrong time to deploy. And often when they're quiet about it, it maybe is like, we're talking at the beginning of September. And I still think we're mid-cycle, and again, just after saying we shouldn't talk about cycles, now I'm saying we're mid-cycle. But I think the point of that is things are going to be longer and smoother. So I don't know that we'll have the blow off massive tops that we used to have in the past. You might in like alts and tokens with a lot less liquidity, but the majors, I think you're going to see less of that than you did in the past.
Yeah, I tend to agree. So
I would just recommend to people, don't put your life savings into crypto. Look at it as, look at it as a really nice and interesting new asset class that historically over a long period of time has performed well. And I tend to tell, my friends, my family, and people who ask me, like, don't trade this stuff like you're a professional. Just pick technologies and tokens that you're interested in and maybe that you use, and plan on holding them for the long run.
Love that. It's fantastic advice. Very similar to what we teach here at Milk Road. So it's great to hear that from you as well. Mike, thanks for joining us today. It was a great episode. Great to learn from you. And I know you have tons of years of experience in tech and in crypto. So really appreciate you sharing that with our audience. For our audience, if you are not subscribed yet, please subscribe and also comment below. If you're listening on YouTube or I think on Spotify, you can now comment. Let us know your thoughts. What'd you think of Mike? Should we bring him back on? But Mike, thanks so much. I appreciate you and all the best.
Likewise. Thank you.
As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.